Hi ladies and gentlemen, this is Game of Trades and this is going to be a technical analysis of the S&P 500. Now in the last video that I made on the S&P 500, I did talk about this candle right here. I talked about this being a potential bearish engulfing candle, considering that the entire body of this red candle actually engulfed the previous candle. Now these candles do need a follow-up afterwards. So you need more candles to the short side for this candle to be a reversal point in the markets. So had you seen one or two red candles after this bearish engulfing, that would have indicated more long-term bearish technicals or intermediate bearish technicals to the next support levels down here. Now, obviously, we didn't get that. We did get a reversal off of the trend line here, and the price has continued wedging on higher. In fact, another thing I did talk about is the fact that the market had been sideways trading for a while in a consolidation zone, and I was looking for a potential break of this level, and a break of this level would again trigger a move down to the next level. Again, we didn't get that. We got a bounce. I think it was right around at the time where Trump announced a potential trade deal with China, which definitely sent the market higher, especially in these past few days. This is a news-fueled spike. So I am still looking for a move down, probably on a break of this trend line. And frankly, as a trader, this is the really only the only way to trade the market. I know some people trade with Fibonacci projections. That's just not my style of trading. Now, don't get me wrong, you can absolutely be invested in the long term, let's say on a long term breakout of the market. Right here, this was a all-time high breakout of the S&P 500. You can be invested long term, but still be looking for shorting opportunities, and looking to short the market whilst being invested in the long term is actually a great way to hedge your investment to be able to make profits both when the market is going up and when the market is going down. And it's also a great way of finding points to reinvest in the market. So let's say if you're expecting a drop from here to this level, then you would reinvest into the S&P 500 at this target point. Now, obviously, recently the markets have been going up with this steep wedge pattern here, and this is good news if you're trying to short the market, because the faster they go up, the harder they fall. So I am expecting a big correction from the S&P 500 in the next couple of weeks, and likely a correction that will be able to be bought back up at one of these support levels. Now, for that to happen, we do need a sell signal, and that is one thing that I am waiting for. We don't have any sell signal on any time frame whatsoever, so right now it's just a game of being patient. We need a clean break of this trend line here, a clean red candle going past this level, and also likely another support level on the hourly chart. And then we can start to look for targets below. And I'm actually going to cover some of the targets that I'm looking at on the hourly chart in just a couple of minutes. But before I do want to cover the daily chart, we have RSI divergence that is still intact. Now it might get burnt through if we start rallying in an even more aggressive fashion, but currently the divergence is still intact, so can still play out. If you don't know what I'm referring to, I'm going to give you a quick example. This was RSI divergence right here in July 2019. We had two consecutive tops here with the RSI going down, starting to go down, so the price going up, the RSI going down, and we've got a drop, a nice sizable drop And again, this is typical of the kind of profits you can make from shorting the market, from being patient, a slow grind for about 55 days that gives you 7% profit, and then you've got a steep sell-off that also gives you the more or less the same amount of profit, 6.8% profit in just 10-12 days. So that's really what we're trying to capture here. You can wait quite a long time and wait for the perfect moment before making a lot of profit in a short amount of time with the SP 500. So as long as you're confident, as long as you keep your stops tight, there shouldn't be any problems with this type of trading strategy. Now, that being said, keep in mind this is an educational video. All of my videos are educational purposes only. So please do not trade based on these videos. Please seek independent financial advice if you are looking for recommendations. Now, another thing to note on this chart is the MACD here. We do have another sell signal. Now, another thing to note on here on the daily chart is the MACD. We do have another whipsaw signal. Now, I've seen this in my trading experience many times, and it's very often when you get these whipsaw signals, when indicators cease to work, when the divergences stop playing out, and actually the greed index is very high, that's when you get those big unexpected sell-offs that actually go a lot further than you would expect. When nobody is expecting a drop, when none of the indicators work, that's when the markets sell off. And that's why you need to be prepared for the situation at all times. You need to have those alerts telling you if the price has gone below the trend line or below a certain level that you're looking at. Now let's go to the hourly chart and talk a little bit about the targets that I'm looking at on the S&P 500, and I'm going to quickly clean this chart up. Now on the hourly chart, we do have this wedge pattern, the same exact wedge with many reactions. So this is a trend line that definitely a lot of people are looking at. We've got the low here and many reactions along the way. So a break of this trend line would trigger a sell-off. It would be a sell signal. For now, though, we do still need to be a little bit patient. It could come any day, but probably a little bit more work to be done in the next few days before something happens. Now, the RSI has a divergence on the hourly as well, so that's very good news if you're looking for a correction in the next few days. On the MACD, we don't really have divergence. You could call that somewhat divergence, but that I wouldn't be following that too much. Definitely the RSI is indicative of a potential correction. Again, we do need a break of this trend line before we can consider an objective shorting position on the S&P 500. Now taking a look at the levels, these are the levels that I highlighted. These are my targets for a potential correction, going all the way down here to the 3022 level. And obviously this is a very ambitious target, and as I say in many of my videos, I really trade one target at a time. When I do hit the target, I raise my stops, book the profits, go to the next one, lower the stops, and the next one, and so on. And really, I can do that for a long time, and try and capture the entire move down and book as much of the profits along the way. Now we're going to take a look at the fib retracements and see which targets are likely. From this low right here all the way to the top, we do have a few interesting fib retracement levels, especially the 38 retracement level and the 50% Fibonacci retracement level, which actually coincide exactly with the support levels, with the actual target levels that I had aligned before. So So this means two things. It means, first of all, it's a good support level to bounce off of, and second of all, it's a likely correction level based on how far we've gotten from the bottom of the rally. So the greener it is, the most likely it is. So the 38 and 50% Fibonacci levels are definitely very realistic levels if we start turning around now. If this is the top, which I'm not 100% convinced it is, it could be. There's nothing on the charts telling me that it necessarily is the top. But again, if it is the top, we could definitely see a move down to these levels. And we'll see about the backtest of the all-time high. That is something that I would love to see for a potential bigger reinvestment into the market. If we do see a backtest of this all-time high, I would consider greatly increasing my position in the S&P 500 for a bounce higher. Now that's about all I wanted to cover in this video. I hope you guys enjoyed this video. If you did, make sure to like and subscribe if you haven't already. In the meantime, good luck on your trading and see you next time.